The most dangerous lie you have ever been told about money is wrapped in a comforting blanket of guaranteed security. We are conditioned from a young age to believe that hiding our capital in a basic savings account is the ultimate act of financial responsibility. It feels deeply secure to log into a bank portal and see the exact same numbers staring back at you day after day, completely immune to the chaotic swings of the stock market. But this profound illusion of safety is actually a guaranteed path to long-term poverty. The psychological comfort of a 0% return is a powerful and destructive trap that challenges conventional wisdom at its core. We are actively taught by well-meaning parents and outdated financial advisors to fear volatility, to seek absolute refuge in the familiar, and to prioritize capital preservation above all else. However, this deeply ingrained safety-first mentality completely ignores the most relentless silent predator operating within the global financial ecosystem today. That apex predator is inflation. According to historical data from the United States Bureau of Labor Statistics, the purchasing power of the dollar has plummeted dramatically over the last century, losing over 90% of its initial value. When you park your hard-earned capital in so-called safe investments, you're not actually building a financial fortress to protect your future. You are slowly and methodically bleeding out, surrendering your economic agency to a perpetually depreciating currency. Let us dissect the actual mechanics of this relentless wealth erosion. Consider traditional safe havens like low-yield bonds or a standard certificate of deposit at your local bank. If your supposedly secure asset yields a meager 2% return annually, but the broader economic inflation rate is running hot at 4%, your real inflation-adjusted return is a negative 2%. You are literally paying a premium in the form of lost value just to maintain the illusion of stability. This invisible tax fundamentally reshapes the entire macroeconomic landscape we operate in. Central banks across the globe function on a deliberate mandate that targets a steady, perpetual rate of inflation, which mathematically ensures that fiat currency will inevitably lose its value over time. The system is explicitly designed to penalize passive hoarders of cash and to disproportionately reward those who deploy their capital into productive, growth-oriented assets. When we analyze these broader market dynamics, the paradox becomes blindingly clear and impossible to ignore. The very institutions printing the money are telling you outright through their stated monetary policies that your cash will definitely be worth less tomorrow than it is today. Yet millions of intelligent, hardworking people still choose to hoard cash, genuinely believing they are making the most prudent and responsible choice for their families. To break free from this insidious cycle of depreciation, you must undergo a radical, uncompromising psychological shift. True financial security does not come from hiding from risk, but rather from intimately understanding, accurately pricing, and strategically managing it. You have to recognize that the pursuit of absolute certainty is the exact mechanism that guarantees your long-term financial underperformance. The primal fear of losing a single nominal dollar drives brilliant people directly into the arms of guaranteed wealth destruction. We must decisively decouple our emotional responses from short-term market fluctuations and focus our unyielding attention instead on the long-term expansion of our actual purchasing power. Volatility is not your enemy. Stagnation is the real threat to your financial sovereignty. This realization demands that we completely redefine what a safe harbor actually looks like within a modern, aggressively postured portfolio. Intelligent investing requires us to acquire robust assets that possess a proven historical track record of outpacing inflation over decades. We are talking about acquiring ownership stakes in thriving businesses through equities and securing income-producing real estate that scales seamlessly with the rising cost of living. Let us examine the strategic power of intelligent asset allocation. A highly diversified portfolio consisting of broad market index funds will inevitably experience temporary, sometimes painful downward dips. But historically, this specific allocation strategy captures the relentless, undeniable upward trajectory of human innovation, technological advancement, and global corporate profitability. Extensive research from the Wharton School of the University of Pennsylvania indicates that over rolling 30-year periods, diversified equities have consistently and overwhelmingly outperformed bonds and cash equivalent. This empirical data proves beyond a shadow of a doubt that market volatility is simply the required price of admission for long-term wealth creation, not a flashing signal to panic and sell your positions. Once you fully internalize and accept that volatility is a necessary toll rather than a punitive fine, your entire approach to capital allocation transforms overnight. You stop playing a defensive game of not losing, and you finally start playing an aggressive strategic game designed to win. The mental shackles of perceived safety fall away, revealing a vast landscape of limitless growth potential. The ultra-wealthy understand this paradox of safety perfectly and they exploit it flawlessly. They do not hoard depreciating cash. They deploy it with ruthless efficiency. They leverage strategic fixed-rate debt to acquire hard appreciating assets, effectively turning the destructive mechanics of inflation into a massive economic tailwind that accelerates their net worth trajectory. While the middle class is desperately trying to save their way to prosperity, only to face diminished purchasing power at retirement, the financial elite are operating on a completely different playing field. They are utilizing scalable income streams, complex equity structures, and bold entrepreneurial ventures to aggressively compound their wealth, leaving the cautious savers entirely in the dust. Transitioning from a passive saver to a dynamic, empowered investor requires a deliberate pivot toward an aggressive growth strategy. We are emphatically not talking about engaging in reckless speculation, gambling on unregulated crypto schemes, or chasing the latest pump and dump mirage. We are talking about making calculated, high-conviction, data-driven bets on yourself and the broader global economy. Building a scalable business or relentlessly developing a highly monetizable, specialized skill set offers exponential returns that no traditional savings account could ever hope to match. By stepping into the arena of entrepreneurship, you take absolute control of the yield, directly influencing your ultimate income potential through superior execution, relentless innovation, and sharp strategic foresight. At a societal level, this massive shift from passive capital hoarding to active, aggressive investment is the very engine that drives global innovation forward. Capital that is confidently deployed into public markets funds groundbreaking new technologies, builds critical modern infrastructure, and creates the profound economic growth that ultimately powers your equity returns. When you purchase a slice of the global stock market, you're actively participating in this grand, unstoppable engine of human progress. You're perfectly aligning your personal financial outcomes with the collective, relentless drive of billions of people waking up every single day working to improve their lives, optimize global efficiencies, and generate massive corporate profits. Look back at the severe inflationary spikes of the 1970s for a sobering historical lesson. Investors who stubbornly clung to perceived safety in fixed income assets and cash equivalents were absolutely decimated in real terms, losing vast swaths of their accumulated wealth. Conversely, those who held robust pricing power equities weathered the brutal macroeconomic storm and emerged significantly wealthier on the other side. The dark echoes of those challenging market conditions still matter deeply today. We are constantly reminded by the cyclical nature of markets that the rules of money are written exclusively by those who deeply understand the critical difference between nominal on-paper gains and real inflation-adjusted purchasing power growth. Your ultimate objective in this financial journey is to build an impenetrable multi-generational fortress of compounding assets. This monumental task requires an unwavering, disciplined commitment to continuous investment, remaining steadfast regardless of what the hysterical daily news cycle is screaming about impending economic doom or temporary market corrections. Compound interest has famously been called the eighth wonder of the world, but it only works its mathematical magic if your underlying rate of return consistently exceeds the prevailing rate of inflation. Your money must be working significantly harder for you than the central banks are working to print it away. We must completely abandon the outdated, overly conservative financial blueprints handed down by previous generations who lived in a fundamentally different economic reality. The antiquated days of working for 40 years at a single company, relying on a guaranteed corporate pension, and trusting a basic savings account to carry you safely through a 30-year retirement are definitively over. You are the sole architect of your financial destiny, and nobody is coming to save you. By actively rejecting the false, seductive comfort of perceived safety, you deliberately open yourself up to the extraordinary, life-altering possibilities of exponential capital growth and true, unassailable financial independence. Start today by conducting a ruthless, objective audit of your entire financial portfolio. Identify the dead weight dragging you down. Isolate the low-yield bonds and target the excess cash reserves that are secretly bleeding out your future potential. Reallocate that dormant capital with extreme prejudice into strategic vehicles designed for aggressive long-term economic expansion. The paradox of safe investments is finally and permanently broken when you realize that the greatest financial risk of all is taking no calculated risk at all. Embrace the volatility, deploy your capital with surgical precision, and step confidently into the arena to build the extraordinary wealth you actually deserve.